Good afternoon, it's 1 o'clock and time for the Wall Street Crossover show, sponsored by Admiral Markets and featuring their market commentator, Darren Sinden. Good afternoon, Darren.
Good afternoon, Zach.
Right, the calm before the storm?
Yes, yeah, I mean, obviously the main event this week is the interest rate decision from the Fed due on Thursday, and everything else to that is merely a preamble.
But it's amazing that people seem to be totally, so you can meet people who are totally convinced they're not going to do anything, and totally convinced that they are going to do something. So it's totally split down the middle, which is not a good state of affairs, is it?
No, it's not. I mean, in the past we've had a fair indication of when and if central banks are likely to move and what they're likely to do, but right at the moment, it's not quite on a knife edge, but it could go either way.
Surely that's a really bad state of affairs. I mean,
it is, but let's
I mean, this is making a mountain out of a molehill. And also, just almost like whatever happens, it'll be taken badly.
Yeah, you're right. Rates are at some stage going to have to rise in the US if we're to return to normalised market conditions. The Fed have tried to play down the idea of a specific date or a time frame. It's not being relevant. The fact is that they want to say that rates will ultimately be up on an upward path. There is a school of thought that that says that maybe if they don't move sooner rather than later, they won't have the window to do that, but we shall see. We'll all know a lot more about 7:01 on Thursday evening.
We should wait for that. Okay, let's look at what happened this morning on the European session.
Okay, well, a couple of sound bites and headlines from Asia before the European markets open. So China factory production and urban fixed asset investment data came out. So in fact, I think the urban fixed asset data came out over the weekend, but nonetheless, both numbers were disappointing and below their respective forecasts. And if we want a little bit more gloom and doom from Asia, then we had the Japanese industrial production figures for July, and they fell more than expected as well. So a slightly sour note coming out of Asia. And then Goldman Sachs made a comment as well to say that they felt that dollar yen could move back to 130 over the next 12 months, and that they expect more QE from the Bank of Japan. So that was the sort of tone from Asia for the early part of the session. But we actually did have some positive numbers from Europe, and once again there's been a surprise to the upside. Eurozone industrial production for July, we look firstly at the month-on-month number, came in at plus 0.6%. That's almost 3 times as high as the forecast, or in fact 3 times as high exactly as the forecast of plus 0.2%. And obviously, though, here below the prior 1.2% read. But if we looked at the year-on-year number, I had to check I was reading this correctly. Year-on-year, industrial production was up in the Eurozone by 1.9% versus the forecast of plus 0.6% and the prior read of plus 1.5%. So despite the mixed data and Mario Draghi's concerns, there are actually some quite, some rather positive data points now starting to emerge. Of course, what we haven't got is consistency and uniformity, which would be the most important things. But nonetheless, that's positive, and as we'll see later, it's been well received by the euro.
Let's go on to the European movers.
Okay, so first of all to Finland and Nokia. These days that's ticker NOKIA in Helsinki, trading at €5.91. That's up around 2.5%. And the telecoms network equipment maker, which is obviously what they do for a living these days, was added to the conviction buy list at Goldman Sachs, who see scope for a significant capital return to shareholders. Not only were they written up today by Goldman's, but also by another, I should say, respected US broker, Bernstein. Goldman Sachs' price target for Nokia over 12 months is €9, and Bernstein, I believe, are just over €9 as well. So very positive, and obviously a decent upside potential there if you believe that story. And then staying with the world of technology, but moving back to the UK, ARM Holdings, that's ticker ARM in London, or if you like the US line, ARMH in the US, £9.48, up 1.5%. And one of the reasons behind this, I think, is that people are sort of waking up to the idea that there is scope now for more handset sales, chip fees and royalties. That means for ARM, from Apple, as their iPhone upgrade plan offers the chance for consumers to buy a SIM-free iPhone on a payment plan direct from Apple for around $32 a month, and that's I suppose pitching Apple in competition to the network providers in the US, and the thinking being that they may attract more people to the Apple brand that people feel comfortable with, and away from the carriers per se. So that's an interesting proposition. We'll see if it pans out, I guess, over the next year, but that was enough to move up ARM rather up by about 1.5%.
Okay, well, let's go on to the M&A moves and rumours.
Okay, well, it's a done deal, it would seem. Solera Holdings, SLH is the ticker in the US, $53.63 pre-market, up around 8.45%. They've attracted an offer of around $55.85 per share, cash from PE group Vista Equity. They in turn are backed by several large investors in this transaction. Solera, though it sounds like it might be a solar energy company, is actually an insurance software group. They effectively put themselves up for sale back in mid-August. The offer price is almost $3 a share higher than the figures that were being talked about last week for this company. Vista Equity Partners are very much a specialist private equity firm, and they specialise in the software space. They manage investments of around $14 billion and have more than 25 investments and businesses under their banner. In terms of what Solera does specifically, it helps US insurance companies process claims from the automotive sector, such as windscreen repair and collision damage. So not a huge deal, I say $6.5 billion, but it's just another bite-sized acquisition, I suppose, by US terms. But I'm sure it won't be the only one we'll see in this software application sector this year.
Okay, great. Let's have a look at the US data points.
Unfortunately, it's a completely empty calendar in the US today. We do have some stuff to look forward to tomorrow. For instance, we've got retail sales, industrial production, and the Empire State Manufacturing Survey. And as we've already said, on Thursday we will have the FOMC decision. So nothing to get too excited about today. You've got the afternoon off in that respect, but plenty to get your teeth into later in the week. Right,
well, let's have a look at the pre-market movers and levels then.
Okay, well, the first stock that's caught my eye is a thing called Wayfair Inc. That's ticker W in the US, $35.36 pre-market, up around 6.99%. This is an online home furnishings group. What's interesting to me here is that they fell very sharply in hours on Friday. They were down by 6.53% on the close. They've rebounded subsequently, as we can see, pre-market. The reason for the volatility was that US investor Whitney Tilson said he was sure. This is a chap who manages a couple of aggressive funds. He's been short for 3 weeks, and he feels the share price of Wayfair can move down considerably lower. That's what his subtext was on Friday. Interesting that pre-market they've recouped all of their losses from Friday, but I suspect we won't have seen the last of the volatility in this company over the near term. And then moving on to second pick today, Advanced Micro Devices, that's ticker AMD in the US, $2.03, up 1% pre-market, but note they were up 9.24% on Friday. And the reason is that there's buyout rumours and a suggestion that Microsoft may be interested in buying AMD to develop chips, I should say, for the next generation of Xboxes, just to give people a flavour of the kind of scale. AMD's had a really tough time over the last couple of years, and their market cap shrunk considerably. It's now got a market cap of around just $1.6 billion, so that wouldn't be...
It's totally, I mean, for a company with such a small capitalisation now, it's quite famous.
Yeah, it is, absolutely.
Must have been much bigger before.
Yeah, absolutely, and it would be, even Microsoft could easily, if it wanted to, write a check for that without even blinking. Yeah, so one to keep an eye on, I think, as well. In terms of levels to watch, European markets better for choice on the day, but rather muted. So FTSE hasn't really changed. Our range is 61.20 on the downside, plays 62.15 to the upside. For the DAX, we move to 10,110 on the downside, plays 10,225 to the upside. It seems a long time ago since we had an 11,000 handle on the DAX. The S&P, slightly tighter range, and we've moved it up as well. 1930 plays 1965 now in the S&P. For the Dow, though, I'm afraid it's still quite wide. 16,385 on the downside, plays 16,500 on the upside. As we said that European data earlier has strengthened the euro against the dollar, so 113.07 now is the new downside level, plays 113.50 to the upside. The Aussie has remained above 70 and is indeed increased in value versus the dollar, so now we're looking at 17.93 on the downside, plays 71.35 to the upside. Dollar yen, stagnant for the moment, 120.10 on the downside, plays 120.47 to the upside. And cable holding its own really, 154.10 on the downside, plays 154.75 to the upside. Seems unfazed by Jeremy Corbyn's election win.
Well, there we are. Amazing. So 60% tax rate probably not factored in yet on the financial markets.
No.
Right.
Not at all likely, perhaps.
Let's go for the dollar yen, which is in focus today.
Yeah, well, I mean, really just coming back to what Goldman had to say this morning about their dollar yen target. Just to reiterate, they said that they felt that dollar yen could weaken to as low as 130 over the next 12 months. The forecast comes, of course, against a background of regional quantitative easing and very mixed economic data from both Japan and its regional rival China. So what do we think could be the catalyst for a fall? Well, the most obvious to further easing from the People's Bank of China and further yuan devaluation. They've said they wouldn't do that, but I think the situation in China could worsen very dramatically, very quickly, and it might well be forced upon them. It's also true to say that the Bank of Japan has got a very important meeting coming up in October. Last year, of course, it dramatically increased its QE budget, shall we call it, and there's an expectation that they might add to that in the October meeting. And if we're looking over the longer term, well, Japan's fiscal position could continue to worsen. I think that's quite likely. The debt burden keeps rising. Remember, they cut corporation taxes recently, or said they would cut corporation taxes, I should say, to try and stimulate domestic demand. One of the RBA's key three-arrow policies was to actually try and raise taxes if he could to help pay down debt, so he's having to backtrack on that for the second time. And obviously the demographics in Japan don't get any better, but that may not be an issue in over a 12-month period. In terms of the chart, we can see that basically dollar yen's been trending sideways. Again, recently having tested up to 125 and then all the way down to perhaps as low as 115.50. We're back in that narrow range where we spent a lot of time between early February rather, and late May. So we're going to need to see something significant to shift it out of that range. But as ever, I think I have to say that my focus is on the downside, and I have to agree with Goldman that the weakness is more likely than the strength in the medium term.
Right, and 130 seems to be quite a conservative target, not a difficult one to be hit, really.
No, not particularly. You can make, as you said before we came on air, you can make a case for a much weaker yen than that. I suppose it will perhaps happen in stages, and who's to say that we won't see a spike to a higher level than 130? But maybe Goldman's are going to be right, and we'll perhaps moderate out to that kind of level.
Okay, Darren Sinden, market commentator at Admiral Markets. Thanks for being on the Wall Street Crossover show today. We'll be back at 1:30 with Darren tomorrow.